All right, everybody, welcome here to show 162 on Crypto Voices. Happy New Year again, as we said last week with Alec. Never say that too late into January. Alec Michel, what's going on, guys?
Hey, what's up, guys? Happy New Year.
We hadn't said Happy New Year to Keto yet, so
it still works.
We're good this week.
Very happy to have on our special guest here today, Pete Winn. He's formerly at Fedi, also has done a lot of work on Fedimints, so going to be exciting to talk about scaling with him today. And he has a new educational portal, love the name, Bitcoin for Humans as well. So lots to talk about, Pete. After that long intro, thanks a lot for joining.
All right, thank you. Thanks for having me. As I said, I've been a long time fan, so this has been one of my favorite Bitcoin podcasts for a while. Bit too rare on the release, but you know,
a bit too rare on the release, yeah. But when we do drop them, always happy we can have good listeners like I said, like my mother and you listening. So appreciate it. So yeah, I'm not sure how long ago you left Fedi, but scaling is all the rage again these days with ordinals and BRC20 and all these things. Should we just start on Fedimints then? What's your latest thoughts? Are Fedimints going to save us from all of these fee crises that we seem to be having and people worrying about?
I guess I hope so would be my answer to that eventually, at least. Yeah. So just a quick background, I guess, on Fedi. So I was working with Fedi for about a year and a half, and I left in November. So at the time I was the head of product and education at Fedi. So did a lot of work on the product, how we were going to roll this out, work with different groups, and then sort of educating people about the concept and how it works. Decided to move on in November, mainly time zone based. I live in West Australia, and West Australia is not the easiest time zone to work back to the US. So a lot of late nights, and having a family, probably time to just focus a little bit more on like the Australian Bitcoin scene. I can always give you guys an update on that later, which would be good. But if we look at Fedimints and fees, I'd say one of the design principles that was always had in mind for Fedimint was a kind of like, how would you work in a fee environment where fees were somewhere in the range of like $500 to $10,000? And this is my, like when I personally look at something like scaling of Bitcoin, I would always like to look at like, what's the end state that we're going to? And if we're successful, what might that look like? And what are the constraints? And then what are the products we might need for something like that? And so my personal sort of Bitcoin journey and how I sort of came into working in it a couple of years ago was I sort of had this feeling that it was probably going to be about a 5-year period where Bitcoin was going to get very aggressively attacked by the state and large corporate interests. And it needed to survive that attack and sort of win. And I thought as part of that, what we might have was a situation where we needed to onboard a lot of people into Bitcoin in quite short order. And then if we were going to do that, we needed to do it in a way where we couldn't rely on any additional soft forks or changes to Bitcoin in order to do that. And so one of the reasons I got very interested in Fedimint a few years ago was that I saw it as a means of scaling Bitcoin up to a global population without the requirement for any further soft forks or changes. Now, if we get those soft forks or changes in the future, I think we can make even better arrangements for how we do like sort of mass custody of Bitcoin with people. But like Fedimint is an option for how we could get there using the technology that's available to us right now. My opinion. So I think maybe before we like dive into the scaling stuff, is it worth doing a quick what is Fedimint? Because I think
it
find
is.
That,
yeah. You know, we had Obi on last year.
No matter how many times it gets said, like people always get confused. So it's worth
absolutely,
it. So,
and even always distinguishing between Fedimints and Fedi itself, the company would be perhaps helpful.
Okay, well, I'd start there then. So I mean, Fedimint is an open source protocol and technology platform on which you can build many different things. Fedi is a company that was formed by a lot of the original people that came up with and funded Fedimint. So sort of Obi was like an early investor into helping the Fedimint open source project. He became the CEO. Eric, who was the inventor of Fedimint back in the day, he then came on as an advisor to Fedi, and Justin Moon was the other founder of Fedi. Like, he was very early in Fedimint and bringing that whole open source project together, and like just really getting some traction and getting the thing running. So really, Fedi is a company that builds on top of Fedimint. Fedimint is just an open source technology project. So my go-to description these days of Fedimint is it's sort of one part Sherpa and one part magic is the idea of what we're going for. So a very high level, and we'll go into that. We'll start with the Sherpa component. So I think it breaks down into like both social things and technical things. So the Sherpa is the social thing. And it's what we would say is that, let's say you wanted to go and climb a mountain. Climbing a mountain is quite an achievable thing for most people to do. It's not out of the realm of like complexity or trial. If you put the work in, you can understand how to climb a mountain, and you can go and climb a mountain and become a mountaineer. And Bitcoin is a bit like mountaineering, because if you put the work in, you can understand it, and there's no barriers to it. You can just go out there, do the work, and you can learn how to hold your own keys, and you can learn to be a Bitcoiner, and you can take custody of everything that you want for your financial future. So Bitcoin is like mountaineering. It's there and you can do it if you put the work in. Now, not everybody looks at Bitcoin the way mountaineers look at mountains, right? Bitcoin can be hard for some people. So what we kind of need is the equivalent of a Sherpa. So the Sherpa would help you get up a mountain, and it would do things for you. So you get your guide. So you get your Sherpa, you get your guide, you get your Sherpas, you get your cook, and you might go and climb a mountain, and you're not that great at it, but maybe it's like your entryway into climbing mountains. And then over time, you develop more skills and you get better at what you're doing. So one of the things that Fedimint does quite nicely is it allows you to be a Sherpa for somebody else. So if you know what you're doing, it's a platform on which you can receive Bitcoin on somebody's behalf and then give them a very simple experience inside the Bitcoin ecosystem. So one of the analogies that often comes out is around community banking. So it's a bit like you could be your mum's bank. Maybe your mum doesn't want to climb a mountain. You could be your mum's Sherpa. So if you've got a family and you might want to hold their Bitcoin for them, this is a way you can do it whilst they can still use that Bitcoin inside that Fedimint. So that's one thing that Fedimint does quite nicely, is a platform on which you can build tools that allow, say, me to be a bank to other people. Now, the Fedi part of this is because that's federated system, which means that instead of it just being, say, me running a bank for a bunch of other people to make it easy for them, me, you, Matthew, Kito, Alec, we could run a bank together. Maybe we don't quite trust each other, so we're not quite willing to collude and steal any of that money, which changes the trust model a little bit. But we can then provide a bank to some other people that then don't need to worry about any of the complexity of Bitcoin. Now, a nice benefit of that is if you wanted to onboard a community with, say, 100,000 people in it, instead of having to educate 100,000 people about Bitcoin and how to use it, what you could do is you could, say, get 10 people in that community of 100,000 people. They could set up a couple of Fedimints and they can compete to offer financial services into that community of 100,000 people. And as long as they offer useful financial services, you're going to bring all of those people into that Bitcoin banking ecosystem. So that's one aspect of Fedimint, if that makes sense. It's a way for you to provide tools for others. So be your mum's bank. Be a good way to do it. So the second one we said is it can be a bit like magic. So it's one part Sherpa, one part magic. The magic piece is that in Bitcoin, one of our favorite things as Bitcoiners to do is to be highly critical of Bitcoin and to talk about all the reasons that it's actually shit and wrong and why we need to change it and make it better. And so, say for you, Alex, like maybe you're most annoyed at Bitcoin because it's not private enough. And then somebody else might be annoyed at Bitcoin because it's not scalable enough, or it's not fast enough, or it can't be used offline, or it's not programmable enough. And we then like to spend a lot of time looking at soft forks and different changes that we could make to Bitcoin in order to solve for a number of those situations. And the problem with that is that there's this real dichotomy in Bitcoin where things are either permissionless and you're allowed to do whatever you want, or they're highly permissioned and you have to get everybody to agree with whatever you want to do. And whenever we're looking at forks or changes to Bitcoin, we fall into the second camp. So if you want to build a business and you want to do something in Bitcoin, you can just do whatever you want. You don't have to ask anybody's permission for that, and it's glorious and open and permissionless. If you want to make one change to Bitcoin so it does something different, you now need to get everybody to agree. And so a lot of what we want to do in this way of making Bitcoin more magic, more quick, more scalable, more private, we have to get everybody's permission to make the changes to do that. Something like a Fedimint or other solutions allow you to do it whilst avoiding that dichotomy. You don't ask everybody's permission, and you just make those changes on a local level. So again, instead of trying to change like the base level protocol of Bitcoin and saying, okay, well, let's make the whole thing more private. So we now have to change like something about the consensus model of Bitcoin. We just say, okay, well, let's say 80% of the Bitcoin is never going to move. There's like 5% of the Bitcoin which might circulate as like quite regular cash. Is it worth putting 5% of the Bitcoin over here, and then it inherits this magical property of being very, very private? Like, is that a trade-off we would look to make for getting private payments on top of Bitcoin without messing around with the base protocol of Bitcoin? So Fedimint is a place where you can send money over to a Fedimint, and then it inherits all of these different properties. And one of the key ones that was done as a core module of Fedimint was privacy. So we implemented on top of Fedimints a system of eCash. So eCash comes from like a very early 80s technology, like popularized in the 90s with DigiCash, where you use Xiaomi and eCash notes in order to make payments. But every one of those is effectively like a blinded signature. So you don't know inside this, let's call it like a community bank. Inside that community bank, the person that runs it doesn't know who are the owners of any of the accounts. They don't know how much money is in anybody's account, and they don't know who is making any of the payments. So we have this like very beautiful private system inside that bank where we can make a lot of different payments. And then again, because Fedimint is effectively a modular system, it's really like a multi-sig that you could layer different technology modules into. We can then extend that to have lots of different properties, and there could be thousands to millions of different Fedimints that exist that are all optimized for slightly different use cases. Some could be for privacy, some could be for issuing of offline notes that we want. Some could be for programmable notes. I think it's highly likely that in the next couple of years, you end up with almost like a Vegas mint, where people can just send money in and gamble to their heart's content, and it will just be all available and free and private on the internet. That seems like the sort of thing somebody's going to build. So I might just stop there for a minute and just see where the next questions were. But does that give a sort of background of like where it is? I don't want to get into too many like technical details off the bat.
No, it's beautifully explained. I can tell your educational role really shining through and your background there. And so definitely that helps. And we did a show with Obi as well. And there's some of the things he said, actually, I wanted to ask you. But my just initial follow-up, and I don't think I asked this directly to Obi, but it's, we have two Americans on the show. We always worry about regulations and taxes and everything here. The description that you pose that how Fedimint is going to come about is, in my view, like beautiful. It's very free banking. It's open, it's community-based, even can be like agrarian-based. You're just dealing directly with farmers and producers and suppliers if you need. It sounds like really, really good, and everything that Bitcoin was supposed to do even. And it's not even a question directed at scale, or not even a question directed at, that's just scaling issues. But the question is directed more at what are the regulators going to do? And is this a question where you just build now and ask for permission later or not? Because it just seems amazing. And I'm just wondering, these coordinators, these people that are minting this eCash, that are running the Xiaomi and mints, what's going to happen to them in the future when this thing becomes like pretty scaled up and everybody knows who the community organizers are, the people that are running the Fedimints? What happens to them in 5-10 years?
I imagine this is one of those areas as well where you ask this sort of question and it's very difficult to get a straight answer out of anybody, because it's it's a legal area, right? So I will
Sure.
obviously say I'm in no way a lawyer, and I'm not gonna. This is so maybe we could just make some general statements about technology and see if they apply. But so I think a few things to bear in mind would be that regulation is different everywhere in the world. Obviously, the US tends to force its regulation elsewhere, whether it's wanted or not. But the same could be true of Europe as well, right? They're not the best at beautiful regulations for other people, or Australia for that matter. But it does differ elsewhere, and it does matter who is providing sort of what different services as well. So it's not, for instance, a lot of people would hold Bitcoin for other people. Like, it's quite common that you would say, like, okay, well, would you ever use a custodian? The answer is no, never. I would never trust any sort of custodian. They're all shysters. And you say, okay, so what about, does your mum have any Bitcoin? They go, oh, yeah. You say, okay, who holds your mum's Bitcoin? You go, oh, I hold my mum's Bitcoin. You say, oh, so you're your mum's custodian. It's like, oh, yeah, I guess I am. It's like, oh, what about like your dad, your brother, like cousins, uncles, aunties? Oh, no, actually, I hold it for the whole family. It's like, oh, all right. So you basically have like a little family Fedimint, effectively, a family mint, as we have to call it. And so this is quite a common structure that, again, if you're not doing this on behalf of a business, that is often perfectly legal. Like, you're not running any money from this. You just happen to be holding something. Now, that can then change depending on maybe which country you're in, and then, again, how those regulations get applied. But there is a space there where people can help out other people for non-monetary uses. And that could be family-based, could be community-based. There's sort of different trust models in the world. It's also true that you can just get regulated financial institutions and they can hold money. So Fedimint is often talked about in this concept of a community bank, because I think when you look towards a more decentralized future, what you want is custodians will be part of that. The question is, like, how many custodians and how distributed are those custodians? So, the world, there's a very big difference between a world that has 21 custodians and a world that has 21,000 custodians and a world that has 21 million custodians. So generally in like the Fedimint space, we talk about it because we want to push towards the world with 21 million custodians, and everybody, there's like a custodian for every couple of hundred people. That probably works out reasonably well, for instance. But also in that spectrum, there will be just large institutions that could use something like this. So it could be that you end up with exchanges like, say, River in the US and Bull Bitcoin in Canada, and then maybe like BitNob over in Nigeria. And none of them say, look, we're not so keen on the legal aspects of any of our particular countries. So maybe we do a shared custodial model across all of those, and they happen to run a Fedimint. Maybe that's difficult because of the privacy aspects, or maybe it's not. It depends. I don't know how the law would work there. But what you could also do, again, is that Fedimint is modular. So when we talk about like the component of adding magic to the Bitcoin, really what that is you can imagine the Fedimint is like, you have like a multi-sig, and usually we have a multi-sig of keys. And it's like, 3 or 4 keys can spend this Bitcoin. The Fedimint is like a multi-sig of computers. And it's like saying, okay, well, instead of putting the money into keys and all we can do is send and receive, now we can put money into these computers. And if 3 or 4 of the computers say you can do something, then we can do whatever we want that we can program a computer to do, which is kind of cool, which is where we get a lot of the programmability of it. Now, because of that, we can write whatever sort of modules we want. So one of those modules was eCash, and that's why it's got great privacy aspects inside of Fedimint by default. But you could take out the eCash and put in a database backend, and now you just have a collaborative custody solution, somewhat similar to something like an on-chain capital that you could do across 3 different exchanges. You could do that and add an EVM, and now you've got everything that you've got from Ethereum or something like that, if you like that sort of thing. You could pull out the eCash and you could put in a Zcash, and now you have, again, different properties inside that. Now, all of those are going to change that sort of like regulatory view of what it is. So I guess maybe the answer is, I think there's probably like a very large design space of what you could do with collaborative custody. A lot of it is probably legal now anyway. Some of it is not, probably, because there's all sorts of things that are illegal everywhere in the world, right? Some places you're not even allowed to drive or whatnot. But it's a tough it's a tough answer to say like regulatorily like how it would go, but I think really there's a big design space. People will try things. I think when those things are tried in the concept of I'm doing it for 20 people, it's not going to get picked up by regulators. I think if it turns out that there's one Fedimint and that one Fedimint has 200 million people in it, that would get regulated. I think if you ended up with 20 Fedimints, that would be a regulatory target. I think when you get into 21,000 Fedimints that have all got 1,000 people in, you get a lot of people on board like that. That would be hard to regulate at that point. Like there's a lot of individuals that you would have to go after. Like I think if you had hundreds of thousands to millions of Fedimints, like I don't see how you would apply that regulation. I'd say that probably put us in we could say right now, could you regulate Bitcoin by just banning holding of keys? There's probably maybe like 1 million Bitcoin holders around the world. Do you think like self-custodial Bitcoin holders? So that would suggest that right now, if you could ban 1 million custodians, so right now there is 1 million custodians. They're just custodians of one. So it would be as easy to ban self-custody now as potentially it would be to ban the community custody of 1 million banks. So it feels like I feel like that would be hard to enact at that scale. But this is all speculation on my part.
That's a very good point, actually, that concluding point. I've never quite thought about it that way.
Yeah.
I think one thing that is always worth remembering is that there isn't a goal in Fedi. Like it sometimes gets compared to, like, say, Liquid, where there's one Liquid network, and it is similar in the way it's designed, except for the fact the goal of Fedimint would be to have the hundreds of thousands to millions of them, not 1 or 10.
Yeah. First of all, super helpful explanation. And so what are the protections, if any, from, or can you implement malicious modules? And is it just market forces, like the community wouldn't subscribe to one, or are there protocol-based protections?
It would be... So I'm just trying to give a good answer. So in effect, the people that decide the modules are the custodians of that federation. So in a Fedimint, you would have, let's say it's a 3 of 4 Fedimint, you'd have 4 guardians. Those guardians run the nodes that create the Fedimint, which is kind of a good analogy in this space. Is probably just think of it like a little mini blockchain or a mini Liquid with 4 people running it. So if those people ran malicious code, then yes, like they could run malicious code in the same way that anybody that ran an exchange could run a malicious exchange. And so you would want to trust those people. Now, that Fedimint is the thing that holds the Bitcoin and then holds issues the eCash and manages the transactions and so on. It's not like how the user connects to it. The user would connect to those Fedimints through one of several different wallets. So there's only 2 on the market at the moment. One is Fedi, obviously, so they were the leaders of that. There was previously one called Fluttermint, which was done very early on and used at HCPP a couple of years ago, but that's kind of discontinued. It wouldn't work these days. And the other one is MutinyNet, so Mutiny Wallet, have implemented Fedimint as well. So you now have 2 different competing wallets that would connect to that. So you would also have potentially checks inside the wallet that could check the modules that were running on the Fedimint. So you would have to kind of have like corrupt the Fedimint and then have a corrupt wallet. But in that sense so then the market forces take over that, like, look, if you trust me and I run a corrupt Fedimint and I give you a corrupt wallet that you have to use, then yeah, I can steal your Bitcoin. In the same way, if I ran a corrupt hardware wallet and sent you my corrupt wallet, you'd lose your Bitcoin. So yeah, awesome. So trust would be important there for who you trust it with.
Sure. Yeah, and not to say that like somehow Fedimint has to solve, malicious actor problems. I was just curious what the approach was. Yeah.
I mean, I think what it does do is it kind of acknowledges that there is a space in the world for trust, where we would say, look, there's a lot of things that one of the things we love about Bitcoin is that it's trust minimized, right? And that gets us a whole bunch of properties we really like the inability of the Fed to affect the money supply. That's really important. And then there's other things that we'd like privacy, but they're held in tension against this thing. And it's frustrating that we can't have both of them in one go. And so it is nice to be able to sort of say, okay, well, instead of compromising on that, I'll just move a bit over here, add a little bit of trust. And now I don't have to compromise. I compromise on trust. But you can choose who you trust. We don't have to give everything to some curly-headed fuckwit from the Bahamas. We could trust somebody that's a lot more local to us on computers and systems that we can audit. Like one of the things that used to get talked about a bit in Fedi, discussed with Obi, was, there's a lot of power in proof of punch in the nose, which is if I'm inside a community and I'm providing a service to a lot of people that I'm very local to, and I've got years and years and years of social capital, and like my family's been around this community for decades, it's not a simple thing to just defraud all those people of money. Like if I did that, I would lose almost everything that I valued in my life from that local community. Maybe we're not necessarily talking about trusting just random strangers on the internet. You can trust people where there's legitimate reasons and things that they would lose if they stole from you. Likewise, if they're local, you can walk up and punch them in the nose, and that is also quite an effective deterrent in a lot of different situations as well.
Yeah. So. Yeah. I like the way you put it, specifically regarding the privacy, that you have that tension with Bitcoin. I mean, everybody who's been around long enough pretty much understands that, and you can apply that to scaling as well, just as I think equally, and it all makes sense from that side. But the interesting thing with Fedi is you do, if you want to bring it back to the banking aspect, is you do have this sort of this free banking structure set up. And a lot of times when people talk about free banking, at least if you're in Bitcoin, they're not a fan of it or whatever. And I always say to them, because as you know, Pete, like I always try to bring that up when I can, I think it definitely was a beautiful system that scaled a lot in the past and worked really well for certain countries. The problem was central banking overtook it, and central banking did win. We have to be honest about it. There is no doubt that, there's a few, the 80-20 rule, it's in full effect with what happened with free banking. I mean, free banking basically got squashed by a few big central banks, and now a few big central banks run a bunch of small central banks. So everybody knows that this is like the core of Bitcoin, is that we have to stop that from happening. And I guess my question, again, I want to ask about the scaling ability, because I think that goal from Fedimint is like beautiful, and I think that it's absolutely something that should be encouraged. But I guess, what are the arguments that you're hearing from detractors or people that they might just want to go another way for Bitcoin scaling? What are the arguments that are sort of against Fedi scaling to where we can get, tens of thousands or hundreds of thousands of guardians and coordinators, where we really can achieve this goal of not being later captured by the regulator? It's maybe a different way of asking the same question I asked before.
All right. So I just wrote down scaling on this piece of paper to make sure I do answer that question as we go through it. I might just deviate slightly and then come back. But because you mentioned detractors as well. So that there are some when I wrote up all the documentation on fedimint.org, I spent almost say for every part of it that explains like how it works, there's an equivalent amount of effort and time and material on like what are the trade-offs that you inherit in this sort of model when you put your money in there. And a quick shout out to Ruben Sonson for spending quite a bit of time with me just walking through like the various different problems that Fedimints have. But now when I first presented on this, it was at the Australia Bush Bash back in July, and again maybe 20, I think it's 22, and I started off that conversation by doing a hands up, and I said, okay, well, who likes not your keys, not your coins. And everyone's like, yeah, not your keys, not your coins. It's like, well, who likes 21 million Bitcoin? And everyone's like, yeah, 21 million Bitcoin, really important. And I was like, okay, we're gonna play around with those things today. We're not gonna entirely break them, but we are gonna fuck around with those concepts a little bit, and we'll see if you still like this idea of Fedimints at the end of it. And I think this is where a lot of the pushback about Fedimints comes, is because you are taking some like really fundamental aspects of Bitcoin, like not your keys, not your coins, and it's inflation resistant, and you twist them in a localized context in order to then inherit a bunch of other different properties. So I think that's where a lot of the pushback comes from, and maybe we drill into that in a minute. But to just like talk about the scaling aspect, I sort of got interested in eCash as a system probably back in about 2019, when looking at Lightning, everybody was telling me that Lightning was a payment system, because you could now make microtransactions and it was cheap and free again, and fees were going to be low. And I remember like learning about Lightning, and I've got a lot of background in like sort of technical architecture and approaches to stuff. And I looked at the system and I thought, no, hang on a minute. If the purpose of the system is what it does, this is not a payment system. It's not been designed. We might be using it as one, but it's not. Like, why would you ever have inbound liquidity in a payment system? That's insane. Like, we can work around it, but it's not what you would do. So I thought, oh, well, what would this be good for? And it seemed quite obvious quite early on that like what would be very good for is balancing debts and payments between banks. It was an interbank clearing system. It's effectively correspondent banking on the internet. And I thought, okay, so we're probably going to end up with some form of like banking or system that sits on top, ideally trustless, that could sit on top of Lightning, and then we balance between different Lightning nodes, and then we make payments from our local node, and we all have a local node. And ideally, we can do that in a way where we can't be rugged or we don't inflate the supply, and that would be great. And so the way that Fedimint helps with scaling is it allows you to do that. It just does it with some of these trade-offs. So everything in scaling in Bitcoin is all about UTXOs. It was never really about transaction speed in my mind. Like, it's great to be able to settle instantly, but it probably wasn't the main problem we had, because we already knew we could do that, because we could already have like a bank holding Bitcoin and then you had a credit arrangement. People are perfectly happy with credit cards. We could just have credit on top of Bitcoin. We know we could do payments on top of that, and we have however many banks Bitcoin could have. When we add Lightning, now we have, instead of it being like, say, 21 million free banks that all batch payments across to each other, now we've got 21 million banks that can settle every second against each other. And you have this much more aggressive free banking system where, yeah, sure, you can fractional reserve your bank, but if I can settle over Lightning, like every second, it's harder to get away with any fractioning. It's not like, was it Hong Kong? They used to have every Friday afternoon, they'd come out and carry all the cash around like the place, and there'd be like a big party. Like, we're not doing that anymore. Now we're going to just settle like every second on Lightning. So I always assumed we had this free banking model. And so, well, in those banks, like what would sit in those banks are the UTXOs. And there is a limited amount of UTXOs that can exist in the world or be transacted on a yearly basis. So the rough number for this is an absolutely maximally efficient use of block space, which is not something we appear to be doing right now, is 640 million UTXOs can be transacted over the course of a year. Like, Lightning transactions will be bigger. So you're probably looking at, if every transaction was Lightning, and it's all we use the base chain for, and we balanced it, you might have somewhere in the region of about 50 million Lightning channels that you can support on top of Bitcoin based on current block timing and size. So at 50 million transactions and channels, we know that if we're going to scale on top of Lightning, the way we need to do it is that we need to share Lightning channels across many more users, or we need to share UTXOs across many more users. So this is where like covenants enters the debate a lot at the moment. Is covenants are our best shot right now at sharing UTXOs with a simple soft fork. The only other way that we can share UTXOs right now without a soft fork is through some form of custodianship. So, Coinbase could have one big UTXO and 10 million users. Like, this is one way of scaling beyond that user number. It's just we don't want to necessarily put 10 million people into Coinbase. So then on this spectrum of custody that you might have between everybody self-custodies to, there's 10 million people in a bank, like what's a setup that we could use that gets it more like 100 people in a bank or 50 people or 1,000 people or something around that level where we bring that power a lot closer to the individual, even if we can't get it all the way over the line. And so the way Fedimint does that is it bundles together, let's say, 10,000 people into one bank. You could then have one Lightning channel that's associated with that Fedimint, which is run by a professional offering a service to these 10,000 people. And it becomes this quite dense economic node on a Lightning network where any payment that comes in to that Lightning channel could go to any one of these 10,000 people. Any one of these 10,000 people could pay to have a payment sent out on the Lightning network, or they could just pay locally inside that bank. But it really does put more people into a Lightning channel. Does that make conceptual sense? If not, I know I haven't got again into the technical weeds yet, but we can if we need to.
No, totally. And I have one question about Lightning for you, because I think, there are more and more Bitcoiners, hardcore Bitcoiners, that say that Lightning is probably doomed to fail or already had, including myself.
Okay.
But I think one of the ways to save it is to have only professionally run nodes and a lot of users behind those nodes. So do you still see a future for individual users having their Lightning node and managing it, or it's a custodial thing and it should remain only a custodial thing?
I think it will, at some point, I think it will be hard to justify running your own personal Lightning node for payments just because of, I think economically it won't make sense. But maybe one point I'd make here to help explain this would be, I think there's an inflection point in Bitcoin where right now we're all used to having several UTXOs, right? Like it's just, we assume that the world of Bitcoin is, I have a bunch of UTXOs and I manage them and all this sort of stuff. Whereas if Bitcoin wins and we bring everybody in the world over into a Bitcoin standard, nobody has UTXOs. Like only people that have them now will have UTXOs. They will be way priced out of what like people's experience of Bitcoin. At best, they might have like some sort of like shared UTXOs or VTXOs or something like that in the future, but that's a future thing. But right now, there will be this inflection where there's going to be the people that have Bitcoin now, and then the people that are going to use the Bitcoin in the future, and it's going to be quite different. And so I'd say if you have Bitcoin now and you have your own Lightning nodes and channels, then there's nothing that would stop you doing that in the future beyond yourself deciding that I'm spending too much money doing this. And again, I think this becomes more of an economic argument that economic density matters in these sort of things. So it's very good for River and Wallet of Satoshi to run nodes because they have so many users that use them that they can be very efficient with that. They can reuse the same sort of capital over and over again for lots of different payments. They can amortize the cost of running the Lightning node. If fees spike to $50, $100, they don't care. And so for you as an individual to swallow $100 fee, what you've got to remember is if my Lightning channel is just me and I can pay for that, and if my fee is like $10, then I go, okay, well, $10 in transaction fees, I can amortize that over like 100,000 different payments that I might make over a 5-year period, and that's okay. It's a reasonable figure. If fees go to $1,000 or like $10,000 equivalent, that fee, I'd have to spend like $1 million of cash before it's worth batching it into one channel for me. And so like maybe, I'm Billy Big Bollocks and I'm just spending money all over the place and it works out and it makes sense. But I think it's most likely it won't. I think it makes sense for like a town. Like, so if you took, again, like a group of 10,000 people and they're all spending like $100 a day, well, then a $1,000 transaction fee is meaningless because there's a lot more activity that's going on inside that node that then pays the fee because it's all batched together. So I think you really do need to like gather people into these nodes. So I think Fedimint is one way to do that. I think something like Arc is another way, or payment pools. There's different ways that we will do it. And I think we'll always make it better over time. My big concern in the last few years was always, I think we should at least have a way of doing it now that doesn't require changes. And then at least we can get to that point where, like, there's a quote from Satoshi in the early days. We said, look, it's not going to be perfect, but we can get a major win against central banks here that could see us in good stead for like decades to come. Like, I think we need to do that bit. It's like, let's get to the point where we can just win, and then we're going to make it better, like over time. If people demand the custody, we can, but let's not do stuff because it's not the perfect solution. Like, things that we can do now that are permissionless are all going to happen anyway. So let's just go do it. But yeah, I think you need to gather together the sort of 1,000, let's say a few hundred, few thousand people into these single nodes and then run them like that. That would be my answer to, I think, how you can best solve Lightning. But I would also say that's sort of, when I look at Lightning as a system, that's just how it looks to me anyway. Is that, like, look, surely this is about balancing liquidity. Like, it's by design. I think it works perfectly for that. It doesn't necessarily work perfectly as an end user payment system, unfortunately.
So I want to pivot a little bit. You have a Substack called Bitcoin for Humans. And now that we've been chatting a little bit, I see. So you use analogies a lot there, right? To, paint more vivid pictures and explain things. And you obviously do that in real life too. I think it's super helpful. But can you speak to, like, you've been doing this for a couple of years, it looks like. What was the genesis of that? And, why this cause to sort of educate people on Bitcoin?
I think it was maybe the genesis of that was kind of like everybody else. It's like, right, I need to do something to help this thing. Like, it needs to win. What could I do? All right, maybe I'll try writing about it. Like, I've done a lot of my background was in explaining concepts to people and kind of bridging a lot of technical to non-technical to business type solutions. And so I thought, all right, I'll start trying to educate people about this. The actual, that Substack itself has been quite fallow for a couple of years because I went and joined Fedi, and I've had zero time during that period. So I'm going to reboot it, I think, next year, and then start producing a lot more sort of like open source diagrams, explainers, primers on different things. But yeah, it was just like really trying to help. And I thought, okay, well, for my background, unless I'm like working in a company in my product space, then that's probably the thing I could offer more broadly to the Bitcoiners. So I'll start doing that. I think I did think at one point, because I never knew anything about like economics or macro stuff back in the day. And then, like most Bitcoiners, I sort of fell down that rabbit hole. I think recently I've come to think that maybe it's a bit of like a Sybil attack on Bitcoiners, that we all get too involved in macro, and we should probably just put it away for a while and not worry about it. And, let somebody like Matt do the economics, and we'll just like listen to Matt. Like, it's just go back to the division of labor. We don't all have to be.
I just make tables. That's it.
Yeah. But that's the way now I thought, okay, well, what I could probably do is start to do more. Like, I've had I was saying to Matt, like, a lot of people have asked me, oh, could you do for something like Arc what you did for Fedimint? So, because I don't know, I got no fucking clue what it is. And like, Arc is a bit like Fedimint, but it's like a Fedimint that you can't rug, which would be excellent, right? It's like a hard to steal from Fedimint. Like, it makes some, and I've said this to Barack as well when I talked to him, but I think it makes some claims about self-custody that I don't think are true. Like, so it would claim that you can self-custody your own Bitcoin inside an Arc. I think that's probably a stretch. I think what you can do is it gives you an opportunity to encumber Bitcoin in a way that it's almost like mutually assured destruction. It's like, if you and a custodian agree to work together, then there's a happy path and you work together and it works very nicely. If the custodian doesn't want to work with you, you probably can't get it back, but he can't steal it. So you may as well work together, because then everything works out and everybody gets paid. So I stuff like that I find quite interesting. I find like there's going to be different ways of doing like bonds on Bitcoin, so that we could say, okay, well, I will run a Fedimint and I'll put up this bond over here, and then if I cheat you, we're gonna create this bond in a way that you can steal that bond from me, or it just gets burnt to miners if I cheat you. And I'll do that because I want the fees from this Fedimint. Because these mints are going to be, like, all the fees are going to be in these mints. Because again, if you take, if you get one person, they pay an amount of fees. If you take 10,000 people, you get way more fees. So these are going to be places where people are going to want to run these systems because they'll be economically advantageous. And I think if you can then do that and you say, okay, well, here's like a 1 Bitcoin bond that I will burn on chain to the miners if I cheat you. And then anybody that I cheat can push a button and there goes the bond. Well, then I'm going to be quite sensible in how I run that sort of mint. So I'd like to see more of these sort of investigations in the future. But that's good.
Do you have any insight though into? No, it's very, very helpful. Back again to a scaling one with Fedimints. Do you have any insight into how this sort of economies of scale is achieved? Because I think it really is the holy grail. Alec and I were talking about the ETF last week, obviously, as everybody else was.
And the Fed.
Yeah, sure. But if you have, let's just take ETFs as an easy example on how this typically works. Because I was talking to Alec, I did run the numbers. Like, it's not that much gold and silver that is in ETFs. This was like, Peter Schiff was harping about this for 20 years and everybody's so excited. Like before Bitcoin, even like gold and silver are going to come back as sound money and all this stuff. And of course they're different because they're physical assets. Bitcoin is not. But the ETF value, I actually just crunched the numbers. It's maybe 200 billion total for gold and silver, $200 billion worth. And gold itself is 11.5 trillion. So it's a small fraction, right? It's like 1.8%. I think I got it here. Bitcoin, interestingly, is already above that percentage-wise. The Bitcoin ETFs are about 30 billion worth. The vast majority of that is GBTC, but that's actually about double. So instead of 1.8, it's about 3.6% of the Bitcoin value, which is interesting already. I'm not saying that's bad or good. I'm just saying there's actually more money relative to the total system in Bitcoin ETFs than there are in gold and silver. And there's we're 1 week in, which is interesting to think about it as far as counting all the spots up. But the point is, whether you're talking about Bitcoin, whether you're talking about gold or silver, like these are supposed to be democratizing funds, giving people access to it. Of course, you're not doing things like putting bond issuance up there like you just suggested, or maybe running your community. We're talking 200 gold and silver funds across the entire world. Like the vast majority of that, 60+% is in the top 5 funds. We're talking, 30 funds worldwide right now for Bitcoin. The vast majority is in the top 1. Economies of scale really do matter, right? And I'm wondering, is there a disconnect? Because we heard this saying, we almost, not to put you on the spot, but we did hear this with Lightning as well, that, people are going to want economically to manage those fees. It's going to be worth it to them. They're going to do it. How many people is that going to be? And whereas with Fedi, if it's going to be economically valuable for entrepreneurs, guardians, people to manage this stuff, community banks, is it different fundamentally? Are we going to get not just one wallet of Satoshi, because that's what we have. I know that it's also unfair to Lightning. I still give Lightning for sure.
I think I see where you're going.
Of this stuff.
Right?
Yeah, but we have one wallet of Satoshi after all these years. How are we going to have hundreds of thousands of Fedimints?
So I think on Telegram, you're asking about say ordinals and fees and stuff. One of the things I said, which is maybe the sort of thing you're not supposed to say as a Bitcoiner, is like low fees always annoyed me on Bitcoin because it felt like we'd failed. I think it's a reflection of the fact that nobody uses Bitcoin. Oh, well, that's not true. There are many people that use Bitcoin, and there's a lot of users of Bitcoin that we don't know about or see on Bitcoin Twitter. They're just all behind the scenes. But it's not used to the extent where it's maxed out currently, and that we have these sort of problems. So often when I'm talking about stuff like scaling, I'm kind of thinking about all right, we need this for 1 billion to 5 billion people. How do we do that? And that's not a problem that we have right now in Bitcoin. We don't have 1 million people, but there's plenty of people building solutions for Bitcoin right now that are building stuff that will work for 1 million that will not work at all when you have 100 million to 1 billion to 5 billion. So usually when I was talking about something like that, I'm talking about it in a future where, all right, people decided Bitcoin was money. We just needed a way to get them in, and now they're using it. And so I think if it becomes the money, then like, yes, you end up with, you could have 10,000 people, they all just transact in the economy, but you're moving like economy's worth of money into Bitcoin. We're not moving like an individual's savings or cash balance into Bitcoin any further. We're actually making everyday transactions. I think in that world, then like, yes, there are fees. Yes, Lightning is very useful. And Lightning and Fedimints and these things are all tools built for that world, but that world doesn't exist yet. And then the next question that you end up with when looking at like, okay, if we're going to scale that, it's like, how do you get to that world? Or is there a path there where some people are already living in that world? So, there's definitely, this is why I guess traditionally Bitcoin was always interested in debanked people or people in hyperinflating economies, because like they have real problems with money now that can be solved. Or, like we talked about previously, like the Human Rights Foundation and the people that they work with, there's people that they run their whole businesses on top of Bitcoin, because they have to, because there's no other option. It's the only bank that will touch them. So I think there's just not that many users in Bitcoin at the moment, and that's why fees are low. But it's fully my expectation that if Bitcoin grows large enough and enough people hold Bitcoin and start to transact in it, that fees will go crazy. Like we won't be making, individuals won't make UTXOs. These fees will be like thousands to tens of thousands of dollars in that sort of end state. If that's the case, then you're not gonna wear that. You're gonna need systems that will reduce those fees. If we don't need it, then we don't need it. Let's just fill it up with pictures and go with it. But but I think I always see it as if fees are 1 sat per vbyte, we've kind of failed at adoption. So maybe let's just go and get more adoption and get people using it.
I have an adoption question.
I don't know if I know them.
Oh, okay. Go ahead, Pete. No, please.
No, you go.
Yeah. So I have an adoption question. It's kind of philosophical, but is it more important to have a lot of people to onboard as many users to Bitcoin as possible, or to educate people about what Bitcoin is? And so hypothetically, right, if Bitcoin's so easy to use and ubiquitous and we've succeeded in scaling, right, and fees reflect use cases, then people who don't really care about monetary policy might use it. However, the message of Bitcoin is super important too. And so, I think I certainly can speak for myself. Learning about Bitcoin changed my perspective on the world. And so it would be a shame for people to just hopscotch over that and just get into the utility without some of that education. And so as someone like you in particular work on education, and you've worked on adoption and scaling. And so how do you see that?
I find it an interesting space because I would describe myself as broadly anarchist in outlook and nature. And so, but some of that has come from Bitcoin as well. I didn't know if I knew all the words to put things together prior to Bitcoin. As part of that, I think it's really important, what Bitcoin represents. I find it uncomfortable, the idea, when we talk about education, it's a bit like saying, but now I want you to think that. And I don't think you can literally tell anyone anything and get them to believe it. I don't think there is a way that we can have people educated into what Bitcoin means and then adopt it because they see it as this sort of shining light on a hill. I think they will get it the way that anybody buys anything. We go back to a standard sales approach in the world, right? People will buy first an antidote to pain, then they will buy pleasure if all the pain's gone away. And then maybe they'll think about ways that they could improve stuff. But it's, broadly speaking, people are going to buy pain. So then the question becomes, well, what are the problems that people in the world experience around money? And then what are the solutions to those that can help them? So, you know, like, it's interesting, like, how successful stable coins have been, right? And it would suggest from a market perspective that stability in your purchasing power has been more interesting to people than increase of your purchasing power over long periods of time. Like, Bitcoin is brilliant at slowly making you richer with great volatility swings. Like, as long as you can sit on it for long enough, it'll help. Stable coins have been a lot more adopted and used in payments because it was just stability. So people love the reduction of variance in decisions when it comes to kind of like, you know, marketing and sales stuff. So I think there is an element where Bitcoin needs some answer to stability and like how you start to provide that to people. And I think stability without counterparty risk is the sort of holy grail. So I think Tether's gone a long way. I mean, what would it be? Sort of 50, 60 billion dollars these days. And Tether, you probably know this sort of thing off the top of your head.
More, I think. Well, more all stable coins, total, yeah.
Is it hundreds of billions or are we
it's probably around 100.
But it's $100 billion of stable coins. That's like, for something that doesn't make you rich, you know, that's kind of utility adoption. That's kind of interesting. I think but the big, you know, white elephant in all of that, okay, is counterparty risk, where, you know, one of the things you did see out of the Russian invasion of Ukraine was the freezing of Russian treasuries. And you can get, okay, well, I guess there's good reasons for that. But at the same time, like, the US banking system has previously, you know, frozen Tether's bank. So is it, you know, what's the odds that they would do this to Tether and just take their treasuries from them? And then it's a completely unbacked stable coin. Now, I think it was maybe something around like $1 billion, where previously the banking system froze Tether's funds, and they were able to bail it out from the flows and from the Bitfinex trading system, and they issued a token against it, and over time they paid everybody back. Maybe you can do that for $1 billion. I don't think you can do that for $100 billion. Like, Bitfinex is not that big. So I think there's, you know, to my mind, it's a bit of like a 50-50 whether that happens in the next 5 years. So there's a 50-50 risk of going to zero on a stable coin. I wouldn't trust that personally. I wouldn't want to roll out any systems on top of that. So I think what you want is some form of counterparty minimized stability on top of Bitcoin. I think that could drive adoption. I think that would be a real winner. So yeah, I know what. Yeah, I think Fedimints could help with that. I think there's other solutions, but that would be good.
Yeah, I think, and you made an interesting point as well about alternative currencies to Bitcoin or competition. Like, it doesn't really surprise me that stable coins have caught on, but it does surprise me, kind of what you were getting at, that Tether has been around as long as it has, Tether in particular, because it's you know, it's very nebulous. Definitely was not transparent about its reserves at the beginning. Now maybe it is, but even if it is, like you said, just like they did with the Russian bank, they could easily do this to the treasuries that Tether holds. So that's a very good point. And again, another kink in the system of like how a free banking system can scale, because they could just shut you down or take your most valuable asset. And then again, just a perspective on where we are there, like 100 billion, 130 billion, that's nothing compared to how much euro dollars float around the world. I mean, that's a $10 trillion plus market. So we probably have a while before they really might take action, but they absolutely could take action. So just my 2 cents on that point. I think it's interesting what you said, but it's.
And so I think there is a module inside Fedimints called stability pools, which does allow a Fedimint to locally issue. Well, it doesn't really issue dollars. It creates like a stable dollar account for you. So like that I find interesting, because again, like, what you're doing is you're swapping the counterparty risk from being two single counterparties in Tether and then their relationship with the US Treasury. and you're taking that and potentially decentralizing that counterparty risk to a much more localized state. So if you could have, 1,000 different Fedimints that are all issuing their own like stable accounts on top of it, then I could see that being very good for adoption, because now you're removing that centralized counterparty risk.
Nice.
There is it's quite an interesting. This is always one of my things that I do love to shill, but it's like an Aussie Bitcoin project. There's a guy over here called Lloyd Fournier. I don't know if you'd have heard from him, but he's done a lot of work in discrete log contracts, and like he was the guy that ported adapter signatures over onto EDCSA back in the day. Like he's got a good pedigree in that area, works on BDK and a few other things. But he has this he's got his like magnum opus project that he's slowly getting off the ground at the moment, which I want to try and help get out into the world. It's called Carol. And the idea is it provides a programmable oracle with like minimal counterparty risk. And the way it does this is if you heard of a project called 10.10.1, or used to be called Itchy Sats prior to this. But what they do is inside a Lightning payment channel, they allow you to create like US dollar synthetics inside this. And the way they do it is they use a discrete log contract, Bitcoin contract, that will allow you to bet against a counterparty. And then effectively you can just go short the dollar with your Bitcoin, they go long the dollar, and they hedge off their risk on a different exchange. And then you, in your account, carry like a US dollar account. Well, back in the day when it was Itchy Sats in its early incarnation, Lloyd used to run the oracle for this system. And he said, like, one of the things that annoyed him is a real pain in the ass, because the way discrete log contracts work at the moment is you need to be very forward looking at what you're going to sign. So if somebody's running an exchange based on like this thing, then they need signed price feeds, like say every second of every day, saying this is the price at this second, this is the price at this second, this is the price at this second, just in case anybody is running a contract against that price feed. He didn't like that, so he invented a way to flip it so that you could only sign an event if you were asked after the fact. So he moved to a different signature scheme based on BLS signatures. And what it allowed the oracle to do was to sign events in retrospect. So now, let's say I was running an oracle, for a price feed oracle for a system, and you had like a completely trustless bet using a discrete log contract. Instead of me having to say up front that I was always going to sign the US dollar price every minute of every day, and then I can't miss that just in case, I only sign a message for that price if you ask me after the fact. Now that's great because it just cuts down the work on the oracle. But it also means that what you give to the oracle can now be generic. So it becomes like a generic after the fact signer of events. So instead of just asking me to sign a price, what you could do is give me a small computer program. So this platform, you can hand it like a WASM program that's pre-compiled, and it can run any program that you would like. It could get any information from anywhere it wants on the internet. Some of that could be just random information that it doesn't use. It can run that for a program. I sign the output of the program and the program itself, and I give that back to you, and you can use that to settle a bet or a different contract. So what it means now is you've got a trust minimized way of running any sort of smart contract that can settle the outcome of a Bitcoin based contract. So this is a good way of putting fully decentralized sort of smart contracts on top of Bitcoin that you could write in any language that you want, and they can take advantage of any information that's on the internet. So I think this is quite interesting. And then the next thing that you could do is, because BLS supports federation of the signatures, instead of it being just me, all four of us could act as oracles. And you could come in and say, look, as long as 3 of 4 of you are going to sign this, then it'll settle this contract. So you can create this really trust minimized like smart contract framework on top of Bitcoin. And then if I'm, say, betting against Matt, and all I'm aware of is that there's 4 people over here, and if I pay them to run this computer program, they will and sign the output, then I know how this bet is going to settle. Instead of doing that, we can just settle it ourselves, in which case nothing ever touches the chain at all. So I think this is like a great way of bringing something like smart contracts, with a few use cases that they may have, into Bitcoin in a way that doesn't even need to hit the chain. Nobody needs to know about it. All the contracts will be entirely private. Even if you provide the contract and the execution to this federated compute center, you could obfuscate the program in a way where they don't even know what they're running. So this is an area that I think is also very interesting. I kind of like it because it's a solid, like, homegrown sort of Aussie project. So I'll be showing that one a bit next year as well. But I think this will be, again, interesting in bringing us more towards that, like, Bitcoin stability is. I look at a company like Riot Platforms. I think you've got a lot of Bitcoin on your balance sheet, and I don't know their corporate risk register, but I'd be very surprised if one line on that is not, we lose our bank accounts. Like, what the fuck do we do? And if I was somebody like that and I had a lot of Bitcoin, what I would want to do is I'd want to say, right, instead of keeping all of my money in several different bank accounts that I'm sure they've got across different jurisdictions, I would like a big chunk of this to just be held inside Bitcoin, but I'd like to fix the price of that Bitcoin. I think the best way to do that is something like discrete log contracts. And then you take a company like NYDIG, let's say. This is all speculation on my part. I think they should do this. But I would say, the NYDIG, you come along and you offer to insure Riot's Bitcoin because you've got a ton of Bitcoin that you're just sat on your balance sheet anyway. Why not go long Bitcoin to Riot's short Bitcoin and provide stability for them for a fee for 21 basis points and just collect the money? You don't have to settle it every second. You could do it all with this sort of Carol-based system, so it's nice and trustless. Jobs are good. I could see stuff like this. Yeah. I think would be good drivers for large-scale adoption, at least. But
Yep, absolutely.
Nice. Hey guys, duty calls here in the U.S., so sorry to miss the rest of the conversation. Pete, it was a pleasure, and thanks for all your time and explanation, and I look forward to chatting again.
Yeah, no worries. Good to meet.
Cheers, guys.
Bye.
See Alec.
Can you hear me now?
Yeah, we got you now.
You're back.
We got you.
Excellent.
Yeah, I just wanted to pick your brain on one topic, because as a merchant, I receive a ton of small UTXOs. And also when I do DCA, it's also a ton of small UTXOs. And recently I had to consolidate or to mix or whatever, all these UTXOs that I got as a merchant. And basically the fees were totaling 30 to 40% of the consolidation transaction.
That's insane.
So how do you see this world in the future when, as you said, few people will have UTXOs, but some of these UTXOs will be really small, or people who are keeping Bitcoin for 10 years already and have tiny UTXOs that grew in value, and they will cost a lot of money to move, actually?
I'm not sure there's a good answer for this beyond if the UTXOs are too small in the future, it will hurt. I think the good thing is that a UTXO that's sort of big enough in a high fee environment now will probably be big enough in a high fee environment in the future, because they're all Bitcoin denominated. But it will hurt equivalently as much. If you had your situation where it's costing you 40% in Bitcoin, it will probably still do that. I think the saving grace for stuff like that is that in the future, you probably wouldn't accept UTXOs as a form of payment. So you wouldn't end up with, let's say a nodl might cost me $500. I don't know if that's the going price, but we'll use it. That's not a massive UTXO for something in the future. So you could see why fees will be big at current Bitcoin prices. In future, I think that's going to be quite uneconomical. Right? It might even be below the dust limit at some point in the future. So maybe you'd accept.
So yeah, as a merchant, because I have to admit I haven't looked into Fedimint a lot yet. So as a merchant, how do I accept, let's say, Fedimint payments? Does it even make sense?
So the way you
how integrated is it in payment methods? Can I receive Fedimint payments with my BTC Pay server today?
No. Well, it depends what you mean. So the Fedimint is effectively where the Bitcoin sits on chain. So let's say one situation could be you're running as a merchant, so you decide to go and use fedimerchant.com, which is, the guys that run it. There's 1,000 different merchants in there that all receive money via this Fedimint, and then they can pay it out. If I wanted to pay you through that service, it would just look like paying a Lightning invoice. So you can pay into Fedimint It just shows you a Bolt 11 invoice, and you pay that, and it goes in. And there's a Lightning provider that's sort of managing that swap trustlessly as well, though. Like, it's all an atomic payment all the way into the Fedimint to you. So you would generate the invoice. So that's sort of maybe how you would receive payments in. If I was paying from a Fedimint, it's kind of the reverse. Like, I have eCash notes inside this Fedimint. I pay a Lightning provider eCash notes for him to pay an invoice on my behalf. So if I'm paying out of a Fedimint, so the way it works is there's a contracting system inside the Fedimint where I post, see if I get this the right way around. When you pay a Lightning invoice, you're effectively buying a pre-image. That's right, isn't it? And so I create because the merchant, the seller, sends the pre-image back down the chain, and then that's how the payment flows. So when I set up a payment going out of a Fedimint, I basically create a contract and say, I will pay this amount of eCash for this pre-image. And then somebody else goes and buys the pre-image by paying the invoice. And then that comes back down, unlocks the eCash, and they get the payment. And it works in reverse on the way in. So effectively, you as a merchant could generate your own pre-images to the invoice, send out the invoice to the person that wants to pay you. That comes all the way in, hits the Lightning Gateway. And then the Lightning Gateway says, okay, I will settle this. I'll receive this money in Lightning and use it to pay eCash here, because I make a small spread on that transaction on the way in. So mechanically, what it would always look like is just more Lightning payments. It's just that Lightning payment actually back ends into what could be, let's say, 100, 1,000, 10 merchants, whatever the amount is that then makes it economically viable. Now, there is another benefit to this, which is that receiver privacy on Lightning is bad. Like, you don't get good privacy as a receiver on Lightning. A very simple way to fix that is to just join a Fedimint and receive into the Fedimint. Now, nobody knows who's received this. So the analogy, I sometimes discuss this one with Obi, was like, look, if you could imagine a Fedimint's privacy is a bit like, there's a bunch of people in New York, and that's one Fedimint. And you don't know who's doing what in New York. You can't really see inside it. You just know stuff's happening in New York. That's maybe intermint, like inside the mint transactions are all the people paying in bodegas in New York. You've got no idea what's going on over there. And then you've got Chicago, and there's a bunch of stuff going on in Chicago. That's like another Fedimint. And you don't know what's going on inside Chicago. It's just, who knows? It's a bunch of cash on the street. And that's what your eCash is like. People in those cities, like making transactions in between. And then the Fedimint over Lightning experience is a bit like, what you see is somebody's going to make a payment from New York to Chicago. And what it looks like is somebody, you don't know who, got into a car or onto a train, and that train like drove all the way over to New York, all the way over to Chicago, and then they got out and then they paid cash. And you're like, what I know is that some money has moved from this city to this city, and I've got no idea like who it was or how much it was or like what was in between. So I know funds are flowing between these things, and I could see that on Lightning and I could observe it all, but I don't know who started the payment. I don't know who ended the payment. And so all of a sudden you get a lot more privacy over the top of Lightning as well, and we can solve a lot of problems there. There's always, this is just because I know I should have done this while Alex was here, because he likes privacy. There's quite an interesting thing you could do inside either using something like Cashew or Fedimint, where the eCash itself, they almost become routable Lightning nodes. So because you can route to it, you can route out of it, and you've got a means of controlling the contract, you could create something like an in-Lightning network obfuscation. So if you imagine like your payments in Lightning, the problem is that you can see them going along a hop, right? And they all just like travel along, and you can use heuristics to go, okay, well, this is probably that payment because everybody's deducted their node amounts by X amount. And we're trying like lots of clever tricks to obfuscate that. One thing you could do is if you created some of these like junction boxes in the middle of the network where payments come in and they sit there for 1 second and then they carry on. And all of a sudden, if you had a lot of payments coming in and a lot of payments going out, it'd be very hard to correlate, well, which payment coming in is which payment coming out. And you could just drop these things just in the middle of the Lightning network, and you could just add privacy all over the place. And it would just make it very hard to just observe a network like that. Particularly like the more seconds that you pause the payment, the more privacy you get. Now that's a custodial thing, but it's a custodial thing that you're accepting for like 1 second. So maybe that's fine. I don't know. Like, I think there's a lot of interesting stuff you could design with these sort of systems, but
Sounds exciting.
and then in terms of like your UTXO problem of, well, if you're inside that Fedimint itself might only have like one big UTXO, and all it's doing with the eCash is then figuring out, okay, well, I'm a push. An eCash is a claim on the let's say a single UTXO per Fedimint, and the amount of eCash you have from the total supply tells you how much of that you can claim. And so you would just accumulate the eCash inside that Fedimint until it made sense for you to then pull out, probably over Lightning, to maybe a different Fedimint you trusted more, or eventually to your own UTXOs, if that's appropriate. I think it's going to be hard to say because you don't know like how ridiculous fees could get, like how much the Bitcoin price is to balance that out to make it worthwhile. So that's how I would see it working.
Well, listen, Pete, this is really this has been interesting. I don't know if you can hear my daughter in the background getting ready for dinner here soon, but actually, I like the way that we finished it, very kind of concrete, and we also had a lot of the philosophical scaling stuff as well. Very, very helpful, very, very informative. Yeah, what do you think? Any closing thoughts here for 2024? Where should our listeners go to find out more about what you're doing?
Yeah, I mean, I don't yet know fully what I'm gonna do this year. Like I gave myself the gift of time to figure that out. So I am on. If anyone wants to chat, I'm on Twitter. So Pete_Winn. Easy. I am on Nostr, but I've got no idea what my pub key is to say that live on it. I mean that would be the best bet. If anyone wants to reach out, I'm always happy to talk Bitcoin. I'm interested in all sorts of stuff in the space, and I'll probably be developing Bitcoin for Humans. It will be the .com. It's not up and running at the moment. So I'm like when Matt was interviewed on every podcast for about 2 years, saying, "No, it's coming. It's coming."
Yeah. Well,
Twitter.
Eventually you get there. I speak from experience.
I'm looking forward to it.
Well, interesting. Thanks a lot, Pete. Really, really appreciated it. I continue to think that Fedimint has a big role to play in the Bitcoin space, and I'm looking forward to when we get there.
Cool.
All right. Take care, man.
Have a good year.